Jamie Dimon is laughing at this banking crisis. He's secretly happy what's going on here because he's a winner in this. This is not obvious, but when we look at what the market is saying, when we look at relative valuations of JP Morgan to the rest of the market, he is profiting from all of this liquidity crunch, from all of the banks going down. Now let's look at this. Let's look at relative valuation charts of JP Morgan to the rest. Let's look at relative valuation of US banks to the stocks. Let's also look at relative valuations of, for example, JP Morgan to Bitcoin, right? How is traditional finance doing to cryptocurrency? So first things first, right? This is the Nasdaq US Banks Index. These are the constituents. So quite a few random banks in the US. And this is the price development of that index. In the last few days, went down by roughly 25%. And also went down to a similar degree relative to the S&P 500. So that's the index divided by the S&P 500. And the Nasdaq was holding up relatively well in the last days. So the banking index did even worse relative to the Nasdaq, right? So this is that Nasdaq US Smart Banks Index divided by the Nasdaq. Now let's look at JP Morgan divided by that Nasdaq US Smart Bank Index. How did JP Morgan relatively perform? Because that's in the end the question, right? JP Morgan wants to get more market share within traditional banking, right? When banking consolidates into just a few major players, this benefits JP Morgan. And this is what we are seeing. Let's zoom out over here. So this is the overall US banking landscape divided by the JP Morgan stock, or the other way around, right? JP Morgan divided by the banking index. And that's at an all-time high. JP Morgan has never been that high, has never been that valuable relative to the rest of banking. It went up since October of 2022 relative to the rest by 52%. And just the recent crisis, right, the last few days, it went up by like 20% or so. So even though JP Morgan itself might not go up in price, right? When we just look at JP Morgan itself, it doesn't look that great. But in the end, the question is always who's concentrating market share overall, because the banking sector as a whole is likely going to recover in the future. But when then, at that time, JP Morgan has a bigger share of all of the traditional market, then that's good, right? That's in the end what you want as a CEO. So JP Morgan is profiting from this. Now let's look at Bank of America. This is the relative chart, right? Bank of America relative to the Nasdaq US Smart Bank Index, also profiting from this. Not to that much of a degree, but still profiting from this. Then here we've got Citibank, same thing, right? So we just looked at the largest banks, right? So JP Morgan, Bank of America, Citigroup. We could go further down the list, but the tendency is clear. The bigger the bank, the more it profits from this, because people are now scared of the regional banks. People are scared that the regional banks are levered the most, that the higher interest rates hurts them the most. And so when people withdraw their money, they want to get it into the safer banks, right? They want to get it to the systemically relevant banks where depositors will definitely be rescued. We have seen already a rescue for Silicon Valley Bank, but let's say you are at a smaller bank, right? Even smaller than Silicon Valley Bank, you might want to consider to move it to the major players. And that's why JP Morgan, etc., gets all of these new deposits. And that's why they get the relative valuation up that much. Now, let's continue with this. Let's look at the S&P 500 relative to the banking index. So how are stocks in general doing relative to banks? And of course, they're outperforming simply because there is this banking crisis, right? So if you just hold an S&P 500 ETF, you're actually doing comparatively fine. Now let's jump into relative valuations to Bitcoin, right? Traditional finance versus the new crypto world. This here is the banking index relative to Bitcoin. So how did traditional banks do relative to Bitcoin since July of 2016? Of course, Bitcoin sometimes has its bear markets, but yeah, this is a pretty clear tendency, right? It looks like crypto over the long term can outcompete, can take market share away from traditional banks. This is the same chart, just turned around. So this is Bitcoin relative to the banking index. And we have seen this peak of 20K at the end of 2017. Right now we are at 24K in Bitcoin. But even though Bitcoin is only up around 40% since that peak in 2017, relative to traditional banking, it's up 72%. So it does take away more and more market share from the US banks, at least in terms of valuation. Let's look at Bitcoin relative to JP Morgan. And here the picture isn't that clear. So JP Morgan did gain quite a bit from this crisis, and so Bitcoin measured in JP Morgan shares is pretty much at similar levels to the peak. But I'd still argue that this is pretty good for Bitcoin, because Bitcoin now is definitely not as hyped as it used to be at the end of 2017, right? So it's now rather depressed. People still believe in a bear market. I personally don't. I think Bitcoin is rather trending up now. But yeah, given that Bitcoin has come down from its top to the current price in relative valuation by 50%, I don't think Bitcoin will stay at this level. I think it's more likely that Bitcoin continues to outperform. And if you simply just wait for a while, we will see more and more capital moving from traditional finance to Bitcoin. This banking crisis does not just benefit JP Morgan. It does not just benefit the big banks. It benefits anything that's risk off, that's fiat and fractional reserve banking off. So Bitcoin is going up, gold is going up, and everything that's not over levered is going up. Now, what's interesting is that the DXY, the dollar strength index, isn't doing much here. And the explanation I have for this is that this is a global problem. It looks like a US banking crisis right now, but it's already spilling over to Switzerland, right? We've got the Credit Suisse collapse, the bailout of Credit Suisse. I think it's likely that more bailouts are going to be necessary very soon in the future if monetary tightening continues like this. And that's why the market overall might turn bullish again, because it might happen now that interest rates could at least stabilize and maybe even come down. And once interest rates go down, this is good for risk on assets. Then borrowing money becomes cheap again, then risk on assets tend to go up again. So this is Bitcoin, that's also tech stocks, etc. So let's see where this all leaves us in the very, very grand scheme of things. When we just look at Bitcoin over the very, very long term and we connect those bottoms over all of those years and the tops over all of those years, it still looks like we've got quite a bit of way to go. The risk versus potential upside is, even though we have come up already quite a bit, still very, very favorable. So if you've got long enough of a time horizon, I think it's still good to buy Bitcoin. Call me a Bitcoin chiller, I'm okay with that. I hold quite a good fraction of my wealth in Bitcoin, and I think I will not regret this when just holding for long enough. Let's discuss the overall situation more in Telegram and in Discord. Links are down below. Looking forward to see you there, and looking forward also to see you in the next video, which describes the premium membership. So in case you're interested in that, more details are over here. Bye bye.